Welcome to IQD Dinar News, your go-to source for the latest updates on currency exchange rates, revaluation news, and insights into the Iraqi dinar. Stay informed and ahead of the curve with our timely analysis and breaking developments. To expand on the statement about the Central Bank of Iraq's reserves and debt situation, we should first appreciate the significance of these metrics in the context of a country's economic health. When the governor of the central bank mentions that foreign reserves exceed 140% of local currency issues, he's essentially indicating that the bank holds a significant amount of foreign currency, providing strong financial backing for Iraq's local currency, the Iraqi dinar. Foreign reserves are crucial for stabilizing a country's currency, especially for an economy that relies heavily on external factors, such as exports and imports. For Iraq, foreign reserves help to manage the fluctuations in oil prices, which are vital because oil exports are a primary source of revenue for the nation. By maintaining substantial reserves, the central bank can support the local currency in times of economic uncertainty or when there are fluctuations in oil revenue. Having foreign reserves amounting to 140% of local currency issuance indicates a solid financial footing for Iraq. This is because these reserves act as a buffer that gives the country flexibility to stabilize the Iraqi dinar if needed. In practice, this means that even if the economy were to experience volatility, the central bank could use these reserves to maintain the value of the dinar. This kind of reserve-to-currency ratio signals strength and a high degree of economic stability, as it implies that Iraq has more than enough reserves to cover its currency in circulation. The significance of having foreign reserves at 140% of the total issued local currency is not limited to financial stability, it also speaks volumes about Iraq's commitment to monetary discipline. A high reserve level relative to currency issuance shows that Iraq is prioritizing its monetary stability, which is critical for both domestic and international confidence in the Iraqi dinar. Investors and trading partners often view such a reserve level as an indicator of a country's financial health, making it more attractive for investment. When the governor mentions that local currency issues amount to about 100 trillion dinars, this figure provides context on the scope of Iraq's currency issuance. The 100 trillion dinars represent the total amount of currency in circulation, and by having reserves that exceed 140% of this amount, Iraq ensures it has substantial liquidity to support economic activities, cushion the economy from shocks, and meet its financial obligations. Furthermore, Iraq's external debt of only $20 billion is relatively modest in proportion to its reserves and currency circulation. This comparatively low debt level is a positive signal, as it suggests that Iraq has not heavily leveraged itself against foreign borrowing, which is often a risk factor for many emerging economies. With a manageable level of external debt, Iraq can allocate more of its resources toward domestic growth and investment rather than on debt servicing. This external debt figure reflects a level of fiscal responsibility, and it also shows that Iraq is not highly dependent on international creditors. In the context of global finance, a low debt burden gives the country greater autonomy in managing its economic policies, as it is less influenced by foreign creditors' demands or conditions. The $20 billion debt level is manageable, especially when considering Iraq's oil revenue potential, which provides it with a steady stream of income that can be used to manage or even reduce its debt over time. Moreover, these economic indicators collectively suggest that Iraq is in a position of resilience and growing stability. The strong foreign reserves and low debt level indicate that the government and central bank are proactively managing the country's financial position. This stability is essential for Iraq as it pursues various economic reforms and development initiatives. By having a substantial reserve, Iraq can also improve its creditworthiness, which is valuable if the country decides to borrow for future development projects. This financial standing could play a critical role in Iraq's currency revaluation aspirations. A high level of foreign reserves and a manageable debt load support the case for a stronger currency value. A currency revaluation, if pursued, could have significant positive implications for Iraq's economy, making imported goods cheaper for Iraqis and potentially increasing the purchasing power of the dinar. It could also help Iraq integrate more seamlessly into the global economy, attracting foreign investments and fostering economic growth. The statement from the central bank's governor, therefore, is not just about numbers. It reflects a strategic approach to strengthen Iraq's financial foundation. The bank is signaling that it is equipped to handle economic fluctuations and that it is working towards a stable and potentially stronger currency. This financial progress points toward a future where Iraq could become more economically independent and potentially increase its global standing through careful monetary policy and prudent fiscal management. Overall, the announcement about the foreign reserves and debt levels underscores a forward-moving trend for Iraq's economy. With a strong reserve position, manageable debt, and a focus on economic stability, Iraq is laying down a foundation that could support sustained growth, improve the value of the dinar, and elevate the country's economic standing on the global stage. These are promising indicators that Iraq is making strides in its economic journey, potentially paving the way for greater stability and prosperity in the long term. Thanks for tuning in to IQD Dinar News. Don't forget to like, share, and subscribe. For more updates on the Iraqi dinar and global currency trends, hit the notification bell so you never miss an update. See you in the next video.